Hi guys, I trust everyone is doing well, and welcome to our second last show for this year. Amazing how time has flown past. It's good to see you all. Apologies that we had to cancel last week's show. I was in isolation. My wife was tested positive for the Omicron virus, but we all fine, all safe, have pulled through and ready to go. Now, I came out of isolation a couple of days ago, and it's amazing how you need to reorient yourself into the market. So I decided not to be actively trading just for a few days. I'm still working up to next week, so we have one more show next week, and hopefully we're able to jump into trades. So I thought I'll just orient myself. Now, I'm going to use that opportunity just to kind of prepare us for the end of the year, on the 7 markets that we're looking at. And then, we will drill down from this higher level time frame to the lower time frame and look at some of the things I'm looking at in terms of setups. Remember, we look for the setup as if we're trading the daily time frame, and when we see it, then we just drill down to the 5-minute and we execute from there. While we're at it, just one thing I want to just share with you guys. One of the things I'm going to be talking a lot about next year is money management. I think there are three, in my view, 3 distinct things you need to become an expert at if you're going to really make money out of this business. So we all here, we're not just traders. This is our business venture. We entrepreneurs. That's where we've got to see ourselves if we really want to make money out of it. So every moment you invest in it, time you invest in looking at the charts, every loss you've incurred, every account you've blown, is just part of business costs, right? Business setup costs. So we just got to keep persevering with it. So one of the things that I'm going to bring in terms of, probably spend about maybe 5-10 minutes, a third to a quarter of our time in every session, is money management. You need to master how to read your charts, and we trade with price action. So you need to be able to look at a chart and say, this is what's going on, and I can jump in and execute. So we need to have strategies that we trade. That's one thing. The other thing, equally as important, your mindset. Call it whatever you want, your trading paradigm, your mindset. You have to become an expert at that as much as you are a trader. It can be one or the other. Then the third thing, which most traders don't talk about, is money management. Okay. And money management really is just about playing the numbers, starting off with the equity that you have, the decisions that you make in terms of the level that you go into the market, how that level of investment that you put in the market increases or decreases when you're on a losing streak. There's a whole science behind it, risk reward money management. And I want to start bringing that and talking about that, because if we get money management right, we're able to protect the profits that we've made, and we're also able to tap into this geometric growth in our accounts. I mean, we don't just want to be good traders that kind of make 7%, 10% a year. We want to make good monies out of this. Want to take whatever capital we have and be able to turn it around and really grow it at a geometric level, super fast, put it that way. I mean, a question that many traders ask me is, can I live off this? Can I survive off this? Can I quit my business? You can, if you master those 3 things, right? So, excuse me. So the guy who just come out of isolation is busy yapping away, not drinking water or coffee. Excuse me. So we're going to spend a lot of time on that next year. So next year's show is going to build those things in, and we're going to talk a lot more about that, because we are entrepreneurs and we want to make good monies out of this. We want to live off this business, not just as a sideline. If it's a hobby, I think there's more interest in hobbies that you can get involved in. Spend your money happily. We're here to run a business. In any case, so let's have a look at the 7 markets. Now, the principles that I share, you can apply to any market. Some guys, well, let me know what about other markets you trade, but you can apply to any market. So here we are, euro versus the dollar. Okay, key things that we're looking at. Well, if we were to do that, you could see the high, all-time high, 1.6 level, all-time low, 0.8 down here. So we kind of in this particular period. That's where we are, and that's what we're going to focus on at the present moment. Okay. So we're on the monthly time frame. We come into the end of the year. I mean, this is going to be so super important, not only into the end of the year, but as we get into the beginning of the year. Whatever we see in here on the monthly time frame determines the key levels of support and resistance that we need to have in mind as we progress. High of 2021, that's the black line there. Low of 2021, that dotted black line is the midpoint of the year. We got down to here, no surprise, measured move from that trading range. So these are the levels of support and resistance that I'm going to leave on my charts as we progress, definitely from now, Jan, Feb, and then when the market breaks out of those levels, happiness. But you need to be aware, this 50% level, blue line, high of last year, low of last year, this was the midpoint of last year. And that pulled the market down, as we kind of went, broke beneath it. And the bears tried to close down here, which was the objective, because if you're a bear, what you want to do? You want to close down here, you want to follow through month, and you want to go and challenge all of these levels. But this tail at the bottom here, strength by the bulls buying into the close. So where we're going to end up this year is going to be significant. Where is December going to end up? Two sides to this. So if you're a bear, you say, okay, there was buying at the bottom, but we want to put a close and get to our measured move. Measured move, high of this trading range, low of the trading range, measured move is here. That's where the bears want to go and close the market down here. So the bears want to see a lot more selling. The bulls are saying, well, fantastic. We've defended where we had a huge breakout. Okay, July of last year with the huge breakout, we defended the low of that. And the bulls want the market to close still above the high of, above the midpoint of last year, high of last year, low of last year, above that midpoint. So at the present moment on the monthly time frame, these key levels you must just have marked on your chart, and then you leave them. As we go into the new year, we can have a look at them. Quick look again on euro on the weekly time frame. So now you start to get a lot more detail about what we're talking about. So as far as on the week is concerned, this is trading range price action. Okay, the bears had a beautiful week here, follow through week here, and all they needed to do was to give us another follow through candle. Then we'd have been saying, okay, wait for the pullback and let's sell. But they failed to do that. Okay, but the fact that they failed to do that, you got to be asking yourself, well, at what level are they failing to do that? And do I have enough information to suggest that the bulls might be stronger and turn the market around? Well, we had a 3 push pattern. Remember, we told you every time that we have a 3 push pattern is significant because the market is trying to break through certain levels, but it's failing on the 3rd push. So that's showing that the bulls have managed to repulse the bears. If you trade in the weekly time frame, you're going to have to wait until we get back to the 10 EMA indicator of strength. Remember, that's what we use the 10 EMA for. And the 20, you can always plonk it in and take it out if you want. That's a nice one to trade any significant bounce off if there's other supportive reasons. But we put the 10 EMA to show the strength of the breakout. Why do we do that? Man, we want to follow the institutions, we want to follow the big monies. So the trend, when we are in a trend, whether it's bullish or bearish, that's an indicator of strength. Bouncing off a 10 EMA, that's when we want to get in, wait for our setups and jump into the market and carry on. Just ignore that, someone will attend to that. Okay, then, so sideways price action on the weekly time frame, if you're trading up here, for us, the only thing we're concerned about, when I say us, because we're trading on the lower time frame, when you come to the weekly time frame, of course, you can see it's trading range price action. So in the week, you are expecting a lot more trading range. And trading range is simply market gets to a certain high, it reverses back into the range, gets to a low, reverses back. Fantastic to trade, but your mindset is going to be trading reversals, which is different to trading trends. So going to be a lot more alert, take your profits much faster. You know, you don't want to be in a trading range and expect to be holding out for 2 to 1, 3 to 1, 4 to 1 in a trading range. You know, get half, 0.5 to 1, take the money out if the market starts to reverse. Just a different way of trading, which all plays into the money management stuff we're going to be talking about last year. So here's what the other thing that you then do, just as part of the habit. Very critical when we start to get to end of the week. So high of last week, low of the previous week. That's all. You've got your key levels from the monthly. Then all we're interested in is high of last week, low of last week, very significant. You know, we then just drop down to the daily time frame. Again, a lot more information, sideways price action. And now you're saying to yourself, okay, there's greater clarity. This is what we're talking about. You're in a trading range. As long as you're in a trading range, you don't take any trade and try and hold out for greater than 1 to 1 at best. You're in a trading range, you sell off at the top, take your profits in the middle, wait for the price to get to the bottom, and you are looking to buy. Key levels, high of last week, low of last week. And you then look at what's happening in the day. If you want to get in and trade, would we get in and trade on the euro? Definitely not. It doesn't mean there's no opportunity to trade, but in terms of us finding those setups where we're going to make a lot of money easily, we don't want to jump in the middle of a trading range. Okay, outside candle, yesterday's candle, that's just another smaller trading range. So for euro, nothing to look at. We're just going to just wait. Okay. Let's jump to the other side. Let's look at the Nikkei 225. Okay, monthly time frame, that's where we started. Okay, just to give us a perspective of what's happening in the year. What jumps out for us, high of the year, black line, low of the year, midpoint. And the market is kind of hanging around there, creating on the monthly time frame. We're hanging around. Let me use proper technical terms. Trading range price action, George. You're not hanging around stuff. Thick blue line, high of 2020, low of 2020, way above that. So, these levels are not key magnets that are going to pull the market down. Most significant level is low of the year, high of last year. Of course, the bulls want to just close above that. With a strong bull trend last year on the monthly time frame, all we want to do is close above the high of last year and keep showing bullish strength as far as the bulls are concerned. Bears in a trading range, you sell off the top and at the bottom you want to buy. So if bears are strong, is it going to happen? Who knows what can happen in the market? If bears are strong, we'll need to reverse the whole of this bullish price session in December and give us a low close, give us a new low for the year. Okay, which would be fantastic because it will be setting up for next year. But as it is, it's trading range price action. And if the bulls end up with a bull candle in the year, this is very significant what happened last year. So bulls will be looking for greater bullish price action in the coming year. Okay, midpoint, high of last year, high of the year, black line, low of the year, midpoint, still a magnet that's pulling the market. That's becomes the deciding factor. All the bulls want to do is just close above that, okay, above midpoint of the year. Weekly time frame, a little bit more information, much wider range, provides greater opportunities for us to trade. High of last week, low of last week, just almost plonk on the high of the previous year. So if we put that in there. Okay, so midpoint of the year, of this present year, 2021, black line, high, low, and high of last week. You can see the effort, the determination by the bulls. I mean, that's what these past 2 weeks have been, trying to give us a close above that to demonstrate strength. Okay, so these levels are important for us as we drill down a little bit lower and we come to the daily. So now we can look for opportunities if they were to set up at all in this week. Will they? Let's see where we would look to trade if the market was to give us that opportunity. I mean, if you just look at the chart, what you see, you can see this big bear strength here. Okay, so bears, pause, follow through, tail, failed, but this is the lower high. So remember what we always want to see a setup, and then we want to go in and say, okay, there I'm seeing a lower high, fantastic. I don't trade off the lower high. I want to see if the market comes back. So that low is lower than that. So that's lower high. That's the pattern we're looking at. I just want now another lower high. Market comes and bounces off this midpoint or off that midpoint. If I get a decent 2-bar reversal like that, that becomes what I want to execute, and I just go to the 5-minute time frame and we look for opportunities there. So well worth watching. We may not get it this week. Who knows? Today is Wednesday. We might get a Thursday, Friday at 10, and then we can trade it. But that level, if we get a bounce off that level, okay, a decent enough for a reversal by the bears, immediately we see that, then we go to the 5-minute. But when you're going down to our 5-minute time frame, the same way that we are marking the high of the week and the low of the week, we'll now be looking at the high of the day, low of the day. Okay, but we don't have that as of now. So worthy to watch. If we get a bounce of that, then go look for our trades. UK 100, I've been educated by my mate Ash, derivative of the FTSE 100, same kind of price action, just different price levels. So monthly time frame, man, we've spoken about this for quite a while. Okay, all-time high, high of last year, low of last year, midpoint. Okay, market well above that, high of the year 2021. Low of 2021, midpoint. So the magnet that's going to pull the market down is to try and get down here. The bears would like, this is trading range price action, but what the bears would need is a strong bear candle. Okay, they were able to create that in the month that closes beneath these lows and closes beneath this midpoint. That's what the bears would like to get to set themselves up for next year. Would they get it? Who knows? But that's fantastic for us. So we just got to keep that in mind, that there is a magnet that's going to pull the market down. For the bulls, what do the bulls want? Well, they're already above the midpoint. All the bulls would need is to close somewhere near the high of the year so far. Okay, but even if the bulls close above that, this is trading range price action. Every time we have a trading range, and every time the market breaks out above a trading range, most breakouts fail. Okay, so if we get strong bull candle up here or closing above that, we have to be thinking, oh my goodness, not big bull trend. Let me just go and find ways to go long. We're going to be thinking most breakouts fail and break out above a trading range, then wait for reversal setup, and we look to trade it down. If you're trading off the monthly, for us on the monthly, trading off the 5-minute, we're looking for key levels of support and resistance. So we've got those marked. We just skip down to weekly time frame. Okay, get more clarity in terms of the week. So double top that we had, so that high and that high the previous week was a double top. So what the bears are looking to, what the bears would like is at the very least get an inside candle that closes near its low, which sets up as a nice trigger for a sell in the following week. The bulls, of course, want the whole thing to fail. And at best, the bulls just want continued trading range price action. So as far as we're concerned, looking for opportunities. Low of last week. Okay, the high of last week is pretty close to the high of the year. So you don't want to clutter your charts. So you could leave it there. You could put it in if you want, but it's not much point doing that. So double top, that's a key level for us to keep track of. If we jump down to the daily. Okay, so these charts start to tell us a story. I mean, this is beautiful. When I see this, man, this is good clarity. So there is a double top. Okay, coming off the double top so far, we've got 5 consecutive days of selling. Absolutely beautiful. This is going to stay on that piece of note to say keep watching this. So what do I need now? All I need is for the bulls to resume and give me bulls to resume buying, bears to defend the double top, give me a lower high anywhere within here, micro double top, lower high, whatever way it forms. As soon as I get that, then I'm definitely going to be going to look for my shorts of the 5-minute time frame. So this is nice. Skip that on the almost execution. Is from our watch list, we just goes to the execution. So that's what we want, but are we going to get that? Who knows? Bears might just accelerate all the way down here, which it's like, oh wow, okay, we missed that one. Then the whole equation changes. If they give us acceleration now, double top, double bottom, we have to wait and rework things again. Are we going to get a higher low, etc.? As of now, we're expecting to see if we get a setup here. So when I keep that on our list, we can come back and look at it. S&P 500. So we've kind of spoken about this a few times. Now, whichever way you look at this, high of last year, low of last year, midpoint, we're out of that. This was the correction that really spoke to the markets distinctly. See, after this long bullish price action that we had, that correction created a trading range. When you had that correction, you got to be saying to yourself, you're a bull, how far is the market likely to go? Sorry, guys. Where would I like it to go? Measured move, break out above the trading range, get to a measured move, and that's exactly where we're at. So though we have the high, all-time high, so this high of the year is also the all-time high. So though we have that, Ellen, let me come back to I'll answer that question of yours. So just discuss that a little bit. Okay, so we are in here. No surprises, right? That's why we put the measured moves. So the market is bouncing off that. That was a magnet that pulled the market up, all-time high. What is likely to happen from here? A correction is likely to happen back to the 10 EMA, which is an indicator of strength. Okay, or it might even drop down to the 20 EMA. Now, does this mean that we are at the end of the bull run? We're not yet at the end of the bull run. Reason for that is if you just have a look at the chart, how many times have we had consecutive bear trend months just by looking at the chart? Twice, right? We had it here, or we had it here. There was a bull month in between. We had it here and we had it here. So until we have consecutive selling months, all you would be anticipating is some form of a correction. Okay, so the market could still keep going on, until we have a correction that takes us back to the 20 EMA, have 2-3 successive months, create some double tops, then we look for selling. So any selling we are likely to see is at lower time frames, but the controlling force is this strong bull trend that we've seen up here. Have a look at the midpoint of the year. We're way above that. So what are the chances that we're going to get a correction in December all the way down here? It can happen, but very small probability. We might just end up with sideways price action, which is still fantastic. So all we're interested in is the high of these key levels of support, because that's a double top that's been created there so far, unless the bull surprises and give us a strong bull candle before the year closes. But at this present moment in time, it looks like what we have is a double top that's been formed. Okay. Go down to the weekly, get a little bit more information. Okay, there's a double top that's been formed. 2 weeks, successive selling, came off the 20 EMA. But the pattern is not large enough for you to trade. So whether you trade in this time frame, hourly, 5 minutes, you want separation between your candles in order for you to trade effectively. On the 5-minute time frame, I'm always looking for at least 6 candles of separation. So this, for me, I would consider that as a double top. I mean, as a top, that's one top, right? I would need to see the market come down, come back, and give me another double top here, for another top for me to say I have a double top. So I need at least 6 candles of separation on any time frame that I'm looking at. So I'm not going to jump into that and say, man, let's assume the bears close beneath the low of this candle. I'm not going to jump to that and start trading it. We need to see separation. Good that we have a top. Let's see the double top and the lower high. So that's having a look at the weekly time frame. Very good for us to see that key level of resistance that's been formed, and also it's almost a measured move. It's almost a measured move if you look at it. Okay, 50% extension, not the full measured move. So if we had another surge up to there, it wouldn't surprise us, because the bulls would like to get a measured move out of that. So for us, we've got to consider just as the first part of the structure that could end up as a double top. Separation of price is very, very key just for us to bear in mind. Okay, and daily time frame. Okay, now they on the daily time frame, there is a decent enough double top. Okay, so all I'd like to see is from this double top, I want to see the market come back and give us a lower high of sorts here, or even it could be at the same level. Then I know I'm going to look forward to take my setups. Now, the question I always get asked, well, George, you always want to kind of see the setup, then look for the lower high. What if you want to jump in? Well, I won't want to jump in, but if you want to jump in, you're very welcome to do so. But the question is, where do you put your stop? You've got to have to put your stop at a measured move, right? So if you decide to say, okay, I want to jump into that, I'll take the trade, put in a bit of lower risk. You're going to have to put your stop up here. That's the correct place to put the stop. Why would that be the correct place to put the stop? Because if the market resumes here and the bulls are strong, the bulls are saying, well, there is a measured move. That's the market that's going to pull the market up. Okay, even if it kind of hesitates at the 50% extension, but the measured move, equivalent height, that's where it's want to go. So if you take in a trade before this pattern is fully formed in front of you, that's the only place to put your stop on this time frame or any time frame. Okay. Alternatively, just wait for it to see what happens, whether we get a lower high or even an attempt to break and it failed. Then you can take the trade. So it's important to kind of wait for that, for the actual setup, because that's how we make good money easily. Okay. So let me just, what is it? Point being made. I want to go back to Helen's point, but on this time frame, so likely heads down, simple. Yeah, double top, lower high. So that's, if I'm answering the correct question, that's what I'm going to look to trade short on this time frame. Now, bear in mind, you see, that's kind of why we looked at the higher time frame to look for those levels of support and resistance. Okay, because we trade on the lower time frame, we can go short even though the higher time frame is saying that the momentum is still up. You know, because we're going to take our trades, manage our trades, get out, you know, when we've got the profits that we want. When I go back to Nikkei 225, just look at Helen's point was Nikkei 225 seems to move slowly. Now, let's look at the chart and see how we answer that. So when I look at a chart like this is a daily time frame. Okay. The way that we find our trades before we go to the 5-minute time frame is we want to see a setup forming, or we want to see a clear setup on the daily time frame. And when we see that, then we just go to the lower time frame, put our levels of support and resistance, and we're going to pick up trades. Now, when you see, let's just start in the middle here. There is a trading range that the market has been. There is a high, there is a low of the year. Okay, if you're trading off the daily time frame, completely off the daily time frame, how much opportunities would you have had to trade off the daily time frame? That would have been significant for you. Okay, you could have traded that lower high, put your stop there, put your stop there, and you can just hold your trade and get what, 1-to-1 or 2-to-1 before the reversal sets up. Okay, you could have probably got same kind of thing, double top, lower high, very difficult to get in here because of the tail. But assume you got an in stop above there, maybe, you know, get out 1-to-1. So the opportunities are there, but depending on how you're trading, okay, they're not as many as you would on the 5-minute time frame. Now, if you trade in the way that we trade, and we see a setup like that, okay, or a setup like that. So when I say setup like that, okay, on the daily time frame would have been said, okay, let's wait for a lower high. You get a lower high being set up. Apologies. Get a lower high set up, then you go to the 5-minute time frame, and that move could be pretty profitable for you. You come back and you've missed all of that, and you say, well, where do I jump in? You've seen all of that, but you're not in. You see a 2-bar reversal like that, decent enough. You know, there is a low that you must mark low of the day, go look for opportunities, you can trade that. Okay, double top, wait for the setup. We don't want that. We want to see a lower high. We don't get anything clean, but you might get a setup, you know, somewhere within here, which you can trade. So the point of it moves too slowly. It goes back to what is your objective in terms of trading? What are you looking for? What kind of the strategy that you trade? What kind of rewards do you want out of it? If you are a trend trader only, and you don't want to trade within trading ranges, then you're going to have to wait patiently and say, okay, I've seen all of that, fantastic. I see a breakout and a follow through. I like only to trade trends. I'm going to wait for a pullback to the moving average. When I get a pullback to moving average in the setup, then I'm going to go and trade. You may not get that opportunity. Okay, the market just remains in a trading range because you want to take your trades in a trading range, take profits in the middle, trading range bottom, take profits in the middle. But if you have both a trading range strategy and a trend strategy, then it really doesn't matter. If it's not setting up for you in terms of trends, there's opportunities to jump in when you see, okay, trading range, let's find ways to jump into the market. I hope I'm answering the question. Let me answer this way. No, it doesn't move too slowly. It depends where you're trading. If you're trading off the daily time frame or the weekly time frame, then your mindset must be prepared just to wait. Okay, take your trade and just wait. If let's just go to the 5-minute time frame. Okay, so that's the 5-minute time frame. And if you just have a look at yesterday's time frame, I mean, if you had a look at that, that is just yesterday, right? Now, there was no setup for us to trade, but assume there was. I mean, all that price opportunity, all that movement, that range for the day would provide you enough opportunities to trade. Okay, I mean, you could just scroll back on every 5-minute time frame, and if you see the opportunities to trade, there's always opportunities to trade. So it does move quite aggressively. Every market moves quite aggressively. The point is, where are you starting from? What is your strategy? And based on your strategy, do you see the opportunities to take a trade? Okay, I hope that answered that one. Hang Seng 50, top 50 Hong Kong Stock Exchange, monthly time frame. I mean, sorry, I don't want to see that. This is absolutely something that's been on my radar quite a bit in the past couple of months, actually. So you have a look at this. High of 2021, low of 2021, midpoint. We're far removed from that. High of 2020, low of 2020, midpoint of last year. Market closed way below that last month and is poised. The bears want to just drive the market down further to see if we can get, I don't know if they're close to the low of 2020, but look at last month, look at a few months back. Anything is possible. Who knows, what's going to happen. But right now, market is bearish. If you want to think of it as where are the bulls likely to come back into the market? Well, look at when we hit the low of 2020, buying into the close. Buying into the close, buying into the close. So you expect there to be a lot of bullish price action here. Bulls trying to close, make sure the market doesn't close any lower than it is at this present moment in time. But the bias is favoring the bears. Are the bulls strong enough to create a higher low double bottom here? We'll have to wait and see. If you just make sure I don't miss out any questions. Hold on a second. On missing the entry opportunity in the 5-minute, you always can find the entry if you don't center or set up as a 5 minutes. That's a good point, Louis. So Louis is saying if we miss the entry in the 5-minute, then let's find an entry in the 15-minute, the same type of setup as the 5-minute. So he's using both the 5-minute and the 15. So if you don't see your setup on the 5, just pop up a couple of levels with 15. And then look for the opportunity there. But then bear in mind, you are now trading the 50-minute time frame. So what I find easiest for me is I prefer to drill down in terms of getting clarity in the market. Okay, so I go from the daily, I go to the 5-minute. And if I don't get clarity there, if I want, then I got to start again daily. What am I seeing on the hourly? And look for opportunities there, especially I do that when I just come to the market middle of the day, for example. Okay. Typically, I prefer to kind of just get up early. You know, my time zone allows me to do that. Get up early, look for opportunities based on what I've seen the previous day. If it's setting up, I want to try and get my trades early in the Asian session and see if I get a trend from the open. I want to just hold it throughout the day. But sometimes, you know, things happen. You pop in halfway through the day, and you know what you had yesterday, but you want clarity. So I put up the hourly time frame and say, okay, what has transpired? What's happening with the hourly time frame? Then I can drill down from there. But I guess the inverse of that is what Lewis is saying. If you are on the 5 minute and you just can't see what's happening, there's nothing wrong with popping up and saying, okay, let me stand back, get a bit of a bird's eye view, and see if I can jump in into the trade of the 15 minute. The key thing to bear in mind is which chart are you now trading off? Okay. One thing that I work on avoiding is if I take a trade and the market is moving my direction, if I'm going to make a decision, which I've done a couple of times, I did it last month with this market, Hang Seng 50, and got rewarded quite handsomely to decide the trade in the market. Now, I'm not shifting now to trade the daily time frame. My stop is still determined by the technical levels that I'm seeing on the 5 minute time frame, and that's what I use, those key levels of support and resistance. So I can let it carry on. If I get stopped out, I'm getting stopped out on the 5 minute, not 5 minute time frame, not the daily. So the moment I start to shift and say, well, oh my goodness, let me hold on this because I'm not doing the day time frame, but then I'm using the wrong stop. You know, I should be using a daily stop, which is way, you know, out now. That increases my risk. So good point, but just bear that in mind. So Hang Seng weekly time frame. Okay, remember, so the bias is still short. Lower highs have been created. Good selling by the bears. Pull back to the 10 EMA. That low. Let's just plonk it in very quickly. Okay, so 3 push pattern, we can't ignore that in attempt by the market to break through to lows. So if the bulls, if this ends up here as a bear candle, next week we're going to be anticipating that even if we have a break beneath it, we might get a reversal. So you go in looking for shorts, but expect reversal. So don't hold too tightly to your thesis of shorts. But for me, the bias is definitely short. So if we jump to the daily time frame, which is what would then give us the trigger to execute off the 5 minute time frame, lower high, wedge bottom. So at this stage, if the bears are strong, then I'm expecting that the bears might try and break beneath this. But if they break beneath this, we are at the bottom of a wedge. Breakout might fail. So expect a pullback, might test that level. So if this ends up closing on its low as it is, tomorrow I'll be looking for shorts, but this level of support is definitely going to remain in view. So if I take any trade short, if I see a reversal pattern setting, I'll be getting out to take whatever profits that I've got out of the market. But I'm definitely looking short on Hang Seng. Okay, a couple of minutes. Oil, I'm just going to show oil and gold on the monthly time frame. Again, so plonk these levels into your charts. Double top, beautiful double top. That's on Brent crude. But the fact that with a double top, we would need, remember those 6 candles of separation. So on a monthly time frame, it might give us 6 months to get to a lower high before we trade it any further on that time frame. So that's a very key level to bear in mind. High of the year, low of the year, midpoint. So we're exactly, the magnet is the midpoint of the year. Bears want to close beneath that. So we set up for more selling next year. Bulls, of course, want to just okay, a bit of a correction double top. Let's close on or near its high and try and set up for acceleration next year. So this midpoint of this year and the high of last year, key magnets in that. So expect a bit of price, trading range price action there. Finally, gold, trading range price action, pretty clear. You can see the market is just hugging the midpoint of the year. High of 2020, low of 2020. There is the midpoint, okay, of last year. There is also the midpoint of this year. So trading range price action, breakout mode, because the market will not perpetually converge as a triangle. Just quickly put that in there, the double top. So at some point, we're going to get a breakout, pretty strong breakout. Might fail, breakout, pullback, or breakout, pullback. But trading range price action for gold. So if you're trading gold, be very aware of reversals. Guys, thank you very much. We're still hanging around, still trading for another week. So we'll catch up with everyone next week. Thank you very much. If you're going on holidays, have a fantastic, restful festive season, and we'll catch up in the new year. Thank you, guys. Thank you, guys. Appreciate it. Thanks for your support and presence. Thanks, Louis. All right, guys. Take care, guys, in the office. Thank you very much.